Mr. Amrish Baliga, independent market expert, joining us this morning. Mr. Baliga, good morning. US President Donald Trump seems all too keen to sack Fed Reserve Chair Jerome Powell. He's threatening
Right.
to get rid of Jerome Powell sooner than expected. Now, this obviously has impacted the US markets. In the long run, do you think Powell getting sacked is going to have an impact on Indian markets?
No, I mean, any impact on the global markets will surely have an impact on the Indian markets, at least in the short to medium term.
Right,
But then, if you're talking of longer term, I think it's going to be more of the way our economy performs and sentiments domestically
right,
than what's happening globally.
right.
As far as India is concerned, I think this whole issue of trade tariffs, I believe, should be beneficial for India in the longer run. Again, assuming that we have the trade agreement in place sooner than later. So overall, and along with that, we are also looking at consumption improving because there's more cash in hand as far as the Indian consumers are concerned. We're expecting a normal to better than average monsoons. That also should be positive on consumption. So overall, I mean, we are expecting the Indian economy to perform decently well. So comparatively, as far as global economy is concerned, we should be an outperformer. And normally, outperforming economy and markets normally receive more funds than the rest of the markets. So
Right.
overall, long term, I think we should be decently be positive on India.
Right.
Short to medium term, it'll get affected by whatever is happening globally.
I want to specifically talk to you about, I mean, of course, it is understandable, and I agree with you that the India story and the fundamentals of the India story will define which way India goes. But on the IT story side, there seems to be a little bit of a confusion right now, emanating, of course, from the commentary which is coming in from domestic IT sector leaders, as well as the recession commentary on the US. Now, we are
Right.
seeing very, very volatile days on the IT sector. When the US markets are doing well, the IT sector charges ahead. And on a day like today, we are seeing a little bit of red on the IT space. In the let's say 1 year to 3 year horizon, how do you expect investors to deal with their IT holdings?
No, I mean, the way I see is IT could be a dark horse. If you're talking of the next 1 to 3 years, it could
Yeah.
be a dark. Yes, I mean, surely there would be an effect on the order flows, but we should remember that as far as IT space is concerned, there are two types of order flows. One is discretionary, the other one is non-discretionary. I mean, the discretionary order flows can get affected, no doubt, if there is a recession in US. But at the same time, the order flows will not become zero. I mean,
Okay.
it will reduce to a certain extent. I think that is already there in the prices of most of the IT stocks, especially, in the last month and a half. And again, post the management commentary of the biggies which came, I mean, that's, I think, already there in the price. And when we talk of the non-discretionary order flows, I think that will continue because you need to keep the systems running. So overall, I don't see a huge negative for IT from here on. And I think this is a buying opportunity, especially if you're talking of the next couple of months, would be a buying opportunity if you're talking of the next 1 to 3 years holding.
All right. So a buying opportunity, buy on dips. Is that what you suggest? Is a day like today a good day to go ahead and buy and build that kitty of IT stocks?
Absolutely, because see, I mean, typically in the like in the sectors where you're looking to invest, I think the down days like these in the specific sector, I think it's a good day to buy because you never know where the bottom is.
All right. Well, of course, you never know where the bottom is. There's also news coming in, Mr. Baliga, and this is from the steel sector. And there is a protection which the government is giving, a 12% safeguard duty for 200 days. Now, will the impact continue beyond the 200 days? And is this something which is going to impact India's steel sector, India's auto stocks, among others?
Yes, I mean, see, even going ahead, I think because of the sort of tariff policies, I think more number of countries globally would be looking inwards and how to safeguard the domestic industry. And that's exactly what India is looking at because clearly it's not only in steel, but I suppose across various commodities and sectors, you could see some amount of dumping coming in from China because end of the day, they have huge capacities and US was a decently large market, about
Right.
15% of the exports. So I think because of which there could be dumping happening in other countries. So I think each of the countries will have to look at safeguarding their domestic industry. So yes, I think it is positive for the steel industry overall. again, looking at the sort of infra demand, the auto demand which is there domestically, overall it is positive for steel. But as far as the auto space is concerned, yes, I mean, they could have got, I mean, the steel imports much cheaper than
Right.
what it would be going ahead. But
Right.
these are generally pass-throughs, so I don't see a negative for the order.
Understood. Not a negative, really. Well, markets have recovered slightly. They opened a little low. They're just about flat right now. Sensex and Nifty are up just about 0.1% or so. Now, while on the Nifty 50, we still seem to be some distance away from the September highs, Mr. Baliga. Remember, the index had reached the all-time high on the 27th of September. Right now, at about 24,120 odd levels, we seem to be in the end November, early December levels. Now, is it too soon right now to believe, Mr. Baliga, that this upward swing is going to continue, and is it too soon to establish a trend line just as yet?
I think so, because I mean, we may be out of the woods, but it doesn't mean that this is a fresh bull run. I mean, a beginning of a fresh bull run. I don't think so. I suppose the whole of 2025, the calendar year, could be a difficult year for the markets from, I mean, earning huge profits like what we saw from 2021 to last year. I mean, the way I see it is possibly we could be at an intermediate top right now because this move was straight from 22,000 levels. We have seen a decent move. So there could be a correction because whatever said and done, I think global news is going to, I think, attack the markets quite closely. So I suppose, at least in the short to medium term, I don't see much of an upside.
Okay.
It's possible that we could see a correction, which again could take us closer to about 23,000 levels, maybe a bit lower.
Right.
That again, I'd say would be a good buying opportunity. And at the current levels, in fact, I'm suggesting those who had bought at lower levels in the last 2 to 3 weeks to at least book some profits.
All right. Well, those who did go and buy those dips, it might be a good opportunity to make some profits. Thank you so much, Mr. Baliga, for taking out and being here with us on News 9 this morning.